Hi everyone, welcome to the Mighty Trades channel. My name is Johar. Welcome to another episode of the Global Market Outlook. So let's take a look at a couple of global indicators to see what can happen in the market next week. And let's start with the oil prices. So we're looking at the weekly chart of the US Brent crude oil, and we can see that it's sort of going in a downward channel since March 2022. That is a good sign. It closed at $106 per barrel yesterday. So let's hope that it continues in this downward trend and settles somewhere between 70 and $80. That will be a very good sign, at least for the Indian economy. Not sure what others. If you look at gold, then gold has also not had any large runaway rally as people were expecting. So it's still consolidating in this price zone. It's at its all-time high right now. Hopefully it will come down further, come back down here. That will also be a good sign for equities. Moving over to US market. US market saw a very deep correction yesterday. Let me switch over the daily chart and let's just look at the size of this candle. This is a very bearish candle that it's made here. Also, if I take you to the line chart, you can see that it's sort of made a double top sort of formation here, and it's broken the support of that double top. So you can expect the US market at least to fall down to these 33,000 levels in the next couple of weeks maybe. So not a good sign for equities. US market going down has a very large impact on other global markets, especially India, because India is very closely interlinked with the US market. As long as it stays above these support levels of 32,000, that is a good sign. But overall, the structure is not looking good because it's making lower highs as you can see here and making lower lows. So let's hope that this low is not broken. I had hoped that the US market would break this previous high on a weekly basis and we would see like a strong sideways movement then, but that doesn't seem to be happening. If you look at the S&P 500, same picture, deep correction for the last 3 weeks. Nasdaq also has been correcting for the last 3 continuous weeks. If you look at the US VIX, that has shot up again. Last week that shot up by 24%, and most of this move came only on Friday. If I'll show you the daily chart, you can see here. And the last 2 days, the VIX has completely shot up. So it can possibly go back to above 30 very soon if things don't stabilize. If you look at the European market, then those have largely consolidated in a sideways movement, but they also corrected on Friday quite deeply. So this is the France index, the index of France that you're seeing here. German market also corrected by 2.5% yesterday. The UK market also corrected by 1.3% yesterday. But overall, they consolidated largely for most of the week. Uh, Now let's look at the other Asian markets. So here we are looking at the Japan market. So you can see that has also been consolidating for the last 2 weeks in this range. If you look at Hong Kong, that has moved down by 4% last week. If you look at the Turkish market, that has moved down very slightly, but it's been on a stellar bull run since February onwards. This is the only market, I think, this is the only index which is actually outperforming the rest of the world right now from what I know. And here we are seeing the market of Taiwan. This is also largely in a downtrend right now, and it's taking support at this zone which it made last year. Now if we look at the US dollar compared to other currencies, other major global currencies, it's very close to its all-time high levels of 103. So it's currently trading at $100, which is not a good sign for equities. It should be ideally somewhere between 90 and 80, and that is like the best time. Sorry, it would be somewhere between 95 and $90, and that is a very comfortable zone for the dollars for the rest of the world. But right now it's trading at its all-time high level, very close to its all-time high level. So not a good sign for us. And if you look at the dollar compared to INR, it is extremely close to its 76.5 level here. So any breakout above 76.5 level is going to trigger a massive sell-off in Indian equities, in my opinion, because that is clearly indicating that FIIs are selling massively and taking that money back to US. So not a good sign for US dollars. I think the RBI will have to use their US dollar reserves pretty extensively to keep the INR strong against the US dollar. Now let's take a quick look at Bitcoin also. Bitcoin has broken its support at $40,000 and gone down. Right now it's trading at 39,638. Again, not a good sign. Risky investments are not the flavor right now because of the high inflationary pressures. So Bitcoin is also not in a very good space. Now let's take a look at our major Indian indexes. If you look at the small cap index, the weekly chart, then we can see that it moved down by 1.8% last week. If you look at the mid cap index, that seems a little bit stronger. It moved down by only 1.56%. Now let's look at the sectoral indexes. So metal stocks saw good profit booking last week, moved down by 2.81%. If we look at the Nifty Bank, that saw a deep correction again of close to 3.8% here. Nifty Private Bank mirroring the same image. PSU banks also corrected by close to 4%, 3.93% to be exact. But Nifty PSU Bank is still looking stronger than Bank Nifty and Nifty Private Bank because it's not too far away from its 52-week high right now. If you look at the IT index has given a very has is not in a very good space. It's broken. It's basically broken this support over here, which was at somewhere between which at 33,000 levels, and it's given a close below that. If it doesn't reverse back over here very soon, then you can easily see the IT index falling down to these levels, which is not going to be great for the Indian markets because TCS and Infosys um, have a very high weightage in Nifty 50. As you can see, TCS and Infosys are both heavyweights in Nifty, so that can drag the entire Nifty back down. FMCG sector largely consolidated last week, moved down by 1%. Media stocks have corrected by 4%, so good profit booking coming in media stocks. Infrastructure stock moved up by 1%, so it's been consolidating for 3 weeks in the same range. If you look at real estate, that has also corrected by 3.5% here. Auto stocks have moved up surprisingly, but again, largely a consolidation happening for the last 3 weeks in the same range, but a very strong closing last week by auto stocks, moved up by 3%. Energy sector is on a complete bull run since the month of March. Energy prices are moving up all across the globe. Even in India, there is an energy crisis happening. There are talks about power cuts happening because of coal shortage, etc. So definitely energy stocks you have to keep on watch list. They are in very strong momentum right now. If we look at consumption moved up by 0.37% last week, but largely again consolidating in this zone for the last 3 weeks. Finance stocks not doing well, moved down by 4.5%. Pharma stocks moved down by 1.5%, but consolidating in this range for the last 6 weeks now. Sorry, 5 weeks. And if you look at the broader market, which is Nifty 500, it moved down by 1.6% last week. Nifty 50 has consolidated in this range and only moved down by 1.74%. So it largely consolidated the entire week in the range of 17,400 and 16,800. So a very consolidating week here. Just made a proper doji candle. Let's see. So the market was very confused this week as to what to do. Let's see if it moves up next week or moves down from here next week. But as long as it stays within this box, we are in a good place. But if it goes below this box, then we can possibly go and retest these levels once more. If you look at the India Wix is still consolidating here at the bottom. So the fear in the Indian market is not too high. However, the way the US markets moved down yesterday, that could trigger a sell-off tomorrow on Monday, which can move our wicks ahead as well. So overall, the picture is not looking great, largely because of the US market and because of the USD INR rate. The INR is getting weaker against the US dollar, plus the impending energy shortages that are happening, and the RBI's policy, monetary policy. Basically, they have witnessed very high inflation in the last quarter at about 6.95%, if I'm not wrong. So inflation is also very high. So all of this is impacting India's recovery and growth. So overall, the picture is looking not too great right now. So it's good to be cautious. Keep your stop losses tight. Take trades only you are sure about. Don't take too many heavy trades in this market right now. It's very sideways. Be very selective of the stocks you're taking, and try and keep some cash handy. Possibly whatever position sizing you were doing before, reduce it by 30-40%, and try and sit on cash as much as possible. So thank you for watching the video, and goodbye.